The stock market is widely expected to drop again today, or crash, as the Democrats are hoping, because of the ongoing uncertainty and changing economic conditions surrounding the tariffs that President Trump placed on the imports to the United States, obviously with the goal of bringing manufacturing back to our country. But like an obese person who finally realized that it's time that they better get into shape, it's going to take a little bit of patience. It's going to take a little bit of time. There's going to be some pain before we get to the gain. And so everybody better just stay calm. Here is Jack Bogle, one of the most brilliant investors of all time, the guy who created index funds. If you're not familiar with what an index fund is, it's sort of like a mutual fund, but the fees are a lot less. And it's basically probably the most ingenious investment tool ever created. And the concept is, instead of investing in a handful of different companies, hoping that some or all of them will go up in the long run, you invest in an index fund like the S&P 500 index fund, which gives you a piece of all 500 of the companies in that index. And what the economists have found is even these hedge funds and these managed mutual funds only have like a 3 or a 4% chance of actually doing better than what the S&P 500 index does over the long run. And so here is some of his wisdom on turbulent markets.
If the U.S. stock market suddenly went into an unexpected broad market decline of greater than 25% and still heading south, what would you tell us to help us stay the course?
Well, the first thing I'd say was, who the heck knows whether it's still heading south? It may have stopped going down at 25%, and a lot of them do stop in the 20-25% range. But it's an opportunity to buy more, and certainly, there are a lot of funny ways of. It's not very hard to give advice on these kind of things, but the one piece of advice I would categorically give to everybody: for God's sake, don't stop a program of regular investing because the market goes down. You're killing the whole value of dollar cost averaging, and it may go down for a few more years. Who really knows? But so much the better when you're putting money in every month, because it will come back. I think we're in a little dangerous territory now, as I tell people. But the 25% drop, 35% drop is easily possible. It's always possible, just because markets are markets. So I think the questioner is right to say, what should I do? And I guess the answer generally is, don't do something, just stand there.
What he means is, and I'm not giving financial advice, I'm a media analyst, definitely not an economist or an investor, but what he means is don't panic sell. Because this little chart is very common in investment communities where people see that the markets or particular companies or indexes are going up and up and up and at all-time highs, and so they think, well, that's a great investment opportunity, and then they crash, and then they get scared, and then they sell, and then later, whether it's in a few weeks, a few months, even a few years, or many years, then eventually, as he said, they always go back up. That individual company, sometimes they go bankrupt, but he's talking about the indexes, the market as a whole, always goes back up. And then people buy back in after they see that it's going up and it's reaching all-time highs, when actually they're buying in at a higher rate than they would have if they just left their money alone. So they actually ended up losing money, which is why this chart says buy because you're greedy, sell because you're afraid, and then repeat until broke, because that's what most people do. If you look at the S&P 500 index fund going back almost 30 years, which again is a compilation of the top 500 companies in the United States, the Dow, by the way, is only the top 30 companies, so the S&P 500, much more broadly diversified. Going back to 1996, you can see that there is a clear pattern, and sometimes for years it does nothing, sometimes it goes down, but in the long run, over a 10-year period, it always goes up. Of course, the liberal media and the Marxist Democrats in Congress don't want people to remember that during several years of the Biden administration, the Dow Jones Industrial Average did basically nothing, didn't gain anything. Here's Peter Lynch, another legendary investor who worked with Fidelity Investments, and during several decades running that investment firm, he basically had returns, I think, were double what the S&P 500 index fund did, which is virtually impossible. But here is his assessment on markets.
But you should study history, and history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means that's a euphemism for losing a lot of money rapidly. But we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet, and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. And so you can take advantage of the volatility in the market if you understand what you own.
But hey, what would these old geezers know? Let's take our investment advice from Dave Portnoy, a sports ball guy who made a ton of money by selling his stake in a sports website, Barstool Sports, and with more money than he knows what to do with, he likes to gamble it in the stock market. And like any degenerate gamble, loses countless millions of dollars, but on occasion, when he does win, he thinks that he is a genius. What say you, pork boy?
I almost tweeted out, Dave, how much are you down right now and today? 7 million. I'm down 7 million bucks in stocks and crypto. And it's tariff city. Trump has put his tariffs all over the place. I've been trying to understand them. I don't. Like, it's more a trade deficit tariff to me.
This is a guy who understands people chasing after balls. Doesn't understand global economics. Just stick to sports, pork boy.
Like, hey, we get this much from you and you get this much from us. Let's even that up. Let's get some wacky formula and do tariffs. And everything's in the because of it.
Sounds like he's been drinking, which is another brilliant move among professional investors. I mean, what's next? Is Ben Shapiro going to get upset that his Jewish friends in the international diamond trade are going to get affected by Trump's tariffs? Oh, wait, what's this?
Yesterday, Israel announced 0 tariffs on any American goods. The Trump administration hit them with a 17% tariff anyway. Why? Because it turns out that we buy more stuff from the Israelis than the Israelis buy from us. Shocker. They're a smaller country. We're a giant market. Not a giant shock, as it turns out. So this is pretty crazy. I have a friend who's in the jewelry business. And this friend in the jewelry business imports products that are not capable of being manufactured or found in the United States from abroad. So it's not like there's import substitution you can just buy from an American. That's not how it works. This, by the way, this company is an American company. The tariff that is now being applied to all of his imports is like 35-40%.
Oh.
Those prices will get passed directly on to the consumers.
Oh no, what are we going to do? People start buying less jewelry. The horror, the horror. Subscribe to my channel if you're new here, by the way, because obviously I'm not one of these people who sucks up to the Conservative Inc. talk show hosts, hoping to get a guest spot on their show or have them retweet me. Here's Tip on Tim on the Cloud News Network talking with Jake Tapeworm, who does surprisingly still have a tiny remnant of a soul inside of his body and occasionally does make some points.
President Trump argues that these tariffs are needed to bring American manufacturing back and to help American workers left behind in places like Minnesota. He has support from the UAW.
The United Auto Workers, the big auto worker union.
UAW called his auto tariffs, quote, a long overdue shift away from a harmful economic framework that has devastated the working class. It signals a return to policies that prioritize the workers who build this country rather than the greed of ruthless corporations, unquote.
Interesting, which is the same thing that Bernie Sanders has been talking about for years until President Trump put the tariffs in place. Now they're a bad idea. But here he is back in 2019.
I believe in trade, but I believe in fair trade, not unfettered free trade. I do not believe that we should be shutting down factories in America and having corporations run to desperate countries where
He almost said third world.
people are paid $1 or $2 an hour. I don't believe in that. The function of trade is not just to make large corporations wealthier.
Tariffs?
When tariffs are necessary, absolutely. We'll use all the tools that we have.
Tariffs? Absolutely. This is an almost 6-minute clip. I'm not going to show the whole thing of nasty Pelosi almost 30 years ago, back in 1996, railing against the unfair trade practices involving China.
How far does China have to go? How much more repression? How big a trade deficit and loss of jobs for the American worker? And how much more dangerous proliferation has to exist before members of this House of Representatives will say, I will not endorse the status quo?
And place tariffs on their imports. I'll spare you from having to listen to any more of her voice, but she does put on a fantastic case for tariffs. Of course, the Marxist Democrats in Congress and their Operation Mockingbird assets in the media are trying to cause panic. They're trying to create a market crash by creating a self-fulfilling prophecy, by scaring everybody that the market is going to crash, which then scares people into selling, which then causes the market to, quote, crash. A concept which was perfectly described in the 1992 film Sneakers.
When I was in prison, I learned that everything in this world, including money, operates not on reality, but the perception of reality.
Posit. People think a bank might be financially shaky. Consequence. People start to withdraw their money. Result, pretty soon it is financially shaky. Conclusion. You can make banks fail. I've already done that. Maybe you've read about a few. Think bigger. Stock market? Yes. Currency market? Yes. Commodities market? Yes. Small countries?
I might even be able to crash the whole damn system.
That's what they want, and that's what they may get. President Trump may not be able to stop this economic Titanic from sinking. A quick look at the national debt reveals that we are over $36 trillion in debt, which is over $323,000 per taxpayer. Even if the market tanks, completely crashes, we slide into a recession, into a depression, you still have to stay unafraid. I'm actually shocked that God hasn't destroyed this country because in many ways, this country makes Sodom and Gomorrah seem like it was inhabited by Puritans. And again, I don't give financial or investing advice, but these guys do. The Little Book of Common Sense Investing by John Bogle and Tony Robbins' Money Master the Game, two of my favorites that I have learned an incredible amount from. I'll leave a link to the Amazon listing down in the description below, so click it and head on over there and check them out.